Are you thinking about renting your first home here in Hoboken, New Jersey? Hey guys, I'm Jeff Bonk with the HBB Group and eXp Realty here in Hoboken, and we've had the honor and privilege of helping thousands of people buy, sell, rent, and invest here in Hoboken. And we have 5 things that we really think that everyone should know about before they rent their first home here in Hoboken. So they come in prepared, they come in knowing what they really need to understand, and they can make informed decisions and find their next place in the most calm, efficient, peaceful way possible. So let's get into those 5. First thing we really think everyone needs to understand is that the rental market can really be the wild, wild west sometimes in Hoboken. Especially right now, it's a very strong renters market or landlords market, and there's not a lot of inventory, and there's a lot of people who want those apartments. So there's brokers out there putting things on their websites, but not on the MLS. Some stuff's on the MLS, but it's already rented. It's really hard to know and navigate sometimes what's really happening and what's really available for you to look at and really apply for. So we really recommend finding one realtor to work with. The unfortunate part is a lot of realtors won't be really excited to work with renters. We here at the HBB Group take a relationship first approach. It's about building a relationship with everybody who comes through our doors, through our phones, into our inboxes, and really be able to service them at the highest level. It's really quick and easy for renters to start thinking, let's jump from agent to agent. You won't get a lot of responses. You won't get that full white glove service from, unfortunately, the vast majority of realtors out there. There's other great ones, just not us, don't get me wrong, but you got to really pick someone, work with them, and stay loyal to them because if they're willing to help you and get through the process with you, because it's really can be difficult to navigate. So that's number 1. Number 2 is be prepared. This market, like I said, is moving fast. So understand what you need to apply for an apartment if you decide you like that one after seeing it. If you want to wait 2-3 days to get your application together, get your credit together, get your pay stubs together, get any personal note or letter to the landlord, which we advise all of our clients to do, together, that might be gone. There might be a lease signed, checks in already on it if you wait 2-3 days to collect those things after you find the apartment you like. So we always recommend all of our tenant clients get that stuff prepared as we're going out to see the first place or even before we do that, because if you like it, you need to move quickly. That's number 2. Number 3 is it really is important how you present your application to the landlord. This person owns the home, right? They could be just an investor who bought it for investment, but a lot of times in Hoboken, it's someone who actually lived there, loved this home, raised, maybe had a baby there, maybe got married in that home and moved to a bigger place, but kept this as an investment. So the way you present yourself, your offer, how easy and clean and neat everything comes together in a package is just going to tell that landlord, hey, this person's got their stuff together. They're organized. They're taking this seriously. They'll probably take really good care of my home as well. We always like to offer even an in-person meeting or a phone call with the landlord, because it gives the landlord a feeling of comfort that they know who's going to be in the home, that they care about, cherish, or even if they didn't live there, they want it to remain a good, strong investment and to remain in good shape. So that's the third thing we always really advise everyone to do. They're working with us or working with someone else. Make sure you're really presenting your application clearly, cleanly, and organized. Number 4 is, have you looked at the numbers for buying versus renting? A lot of people have, but we find a lot of people haven't, and they think they need 20-25% down. They think the payment's going to be so much higher. And look, in certain circumstances, yes, you do need 20 or 25% down potentially, and maybe the payments will be higher. But depending on the price point you're looking in, the type of building you're looking for, the amenities, is it a walk up? Is it in what part of town is it in? You could be really surprised that the rate might be lower than you think it is. The down payment might be 5 or 10%, or maybe even 3.5% if the building's FHA approved, or we could do a spot approval with one of our awesome lenders. And maybe not. There might be a $1,000 or $2,000 gap where renting is much cheaper. And if you're looking to only be here for a year or two, renting could still be the right option. So it's not a one size fits all. Everyone should be buying. We 100% don't have that approach, but there is always an opportunity to look at it just to make sure maybe it makes more sense. If you don't look at it, you'll never know. So that's number 4. And number 5, the last but not least, is really know the difference and be prepared for the rental building or the condo building decision. A lot of people like the rental buildings because they're a little bit newer. Some of the newer buildings that were built in town tend to be rental buildings. The condo buildings may be a little bit older. They're not as fresh and brand new. But there's some differences outside of just new versus old. You have things like renting from an individual versus renting from a big company. Big company, 99 out of 100 times, are cared about dollars and cents and raising the rents as much as they can, if they can. Break fees are very unflexible. If they can get you for an extra little $1,000 here, a couple thousand there on the way out, they'll do those things because it's a business to them. There's no soft approach to it. There's no like humanistic approach. They're not bad people. They're just running a business, and they have investors, and they have things that they really have to prioritize over the comfort and the care of a tenant that wants a little flexibility or doesn't want his rent raised or her rent raised as much as they might be able to as the company. From a condo perspective, you're going to have a lot more intimate relationship with your landlord. That landlord's going to usually own just the one unit, maybe 2 or 3 units, but they're not a professional who's maximizing, optimizing, and they might not raise the rent as much. We have one rental in town that the tenant is amazing. The rents have gone up like crazy, and she really said, I could do this so much increase, but I can't go all the way to market rate. I understand. She's really sweet. And we said, you know what, we're not going to go to market rate because we really value having you as a tenant. You've been great for years, and we appreciate, how well you take care of the home. And we were well below market rate for that. That was a personal decision that we made. Big companies aren't going to make that decision the same way usually. Also, the building itself usually tends to be taken care of a little bit better, even though they might be a little bit older. There's a board, there's an HOA community that really makes sure to take care of that building, treat it right, make sure the values are maintained, which just provides a little bit of an elevated day-to-day feel of the building. Upgrades happen more regularly. People take care of the building a little bit better because you might be renting there, but there's probably 75% of the people are owner-occupied who live there. It's just a different feel to the building, a little bit more of a community, a little bit less of high turnover that you'll find in some of those rental buildings. Both are good options. There's different pros and cons of both, but know the difference and know if you're willing to look at those buildings or if you really want to stay with the other type of building. So that's our 5 things. I hope this is helpful. There's a lot of things to consider outside of that based on just what's the right fit for you, what part of town, how much space do you need versus how many amenities you need. So it's really a kind of big, organic, all-inclusive conversation to have. So reach out if you want to have that conversation with us or one of our advisors here. We're always happy to talk it through with you, make sure it's the right fit and you're on the right track to find your first or maybe second or third Hoboken apartment. See you guys later.